If you're flipping houses, wholesaling, or trying to scale a rental portfolio, you've probably hit this wall. You find a killer distressed property, buy it with hard money, put $40,000 into the rehab, and create $100,000 in equity. Then you take it to a traditional bank to refinance into a long-term mortgage, and they hit you with the two deal killers. First, they want 2 years tax returns, W-2s, and pay stubs, which turns you down immediately if you're self-employed or you write off your expenses. Second, they tell you have to wait 6 to 12 months for title seasoning before you can refinance based on the new appraisal value. That's your hard-earned capital trapped in a deal for half a year while you pay hard money interest rates. In this video, I'm going to show you how the top real estate investors combine hard money and DSCR loans, and how to eliminate that 6-month waiting period completely with zero title seasoning. My name is Mitchell Dunn, and I'm a loan officer with Loan Factory, and let's break down that exact strategy. First, let's make sure we understand the roles these two loan types play, because they are built for entirely different stages of your deal. Hard money is your short-term acquisition and construction funding. Purpose is fix and flips or heavy rehab BRRRR properties. Leverage up to a 90% of purchase price and 100% of the rehab. Now, for experienced flippers, we do offer 100% of the purchase and 100% of the rehab. Next is speed. Closes in 7 to 10 days without looking at your personal tax returns. Now the catch. High interest rate and short 12 to 18 month terms. It's meant to be temporary capital. DSCR loans, debt service coverage ratio, are long-term 30-year fixed wealth building loans. The purpose is long-term buy and hold rental properties. Now the qualifications, it's 100% based on the property's rental cash flow versus the monthly mortgage payment and not your personal incomes, W-2s, or tax returns. Hard money buys and fixes the property. DSCR holds the property and builds long-term cash flow. But how do you bridge the gap between them without losing your shirt? Here's where 90% of investors get stuck. With traditional Fannie Mae, Freddie Mac, or standard bank loans, if you buy a house for $150,000, put $50,000 into rehab, and it appraises for $275,000. The bank will force you to wait 6 to 12 months before they let you refinance based on the new $275,000 value. If you refinance before 6 months, they will only lend based on what you originally paid for it. That leaves your money stuck, and you're paying 10 to 12% interest rates on your hard money loan every single month while you wait for a clock to tick down. Through my lender network with Loan Factory, we offer DSCR loans with no title seasoning requirements. That means the exact day your rehab contractor finishes the job and a tenant is ready for rent, we order an appraisal based on the new appraisal value, your after repair value. No waiting 6 months, no waiting 12 months. You refinance straight out of a high interest hard money loan into a 30-year fixed DSCR loan on day one. Here's the exact playbook to execute this. Step 1, buy and rehab with hard money. Secure up to 90% or 100% with experience, and 100% rehab funding. Step 2, complete the rehab, get the property into rent-ready condition. Step 3, lease or appraise. We order a DSCR appraisal with a Form 1007 rental market schedule. As long as the market rent covers the new mortgage payment, a 1.0 DSCR ratio or higher, you qualify. Step 4, execute the zero seasoning refi. We pay off your hard money lender, pull out your initial equity, and lock into your 30-year fixed cash flow asset, all closed directly in your LLC. And if your credit isn't perfect, we offer DSCR options starting down to a 620 FICO score, low ratio options down to 0.75 DSCR, and even a no ratio DSCR program. If you're a wholesaler looking for a reliable lender to get your end buyers qualified, or flippers that's sitting on a hard money deal right now needing a fast exit strategy, don't let that title seasoning trap your capital. Because I work with Loan Factory, I don't have just one set of bank rules. We shop to find the exact guidelines, lowest rates, and best cash out terms for your deal.